Auto industry all over the world has faced many challenges in the past few years. Especially during COVID, we saw a sharp fall in demand for automobiles. And post-COVID, when demand started improving, auto companies faced supply-side challenges like semiconductor chip shortage, geopolitical tension with war between Ukraine and Russia, and crazy jump in commodity prices that badly impacted auto companies' margin. However, it seems the worst is behind for auto sector, especially for companies focused on Indian market, as the demand for auto sector is picking up strongly in Indian market. Hey everyone, my name is Sahil and this is my Personal Finance Academy. In this video, I am going to discuss two auto auxiliary stocks that are looking very promising and DIIs are consistently buying them quarter on quarter. Since the auto sector is now reviving, these two auto auxiliary companies focused on Indian market on a very high growth trajectory and can do really well in the coming few quarters. Interestingly, one company is a mid cap and one is a small cap. So both companies have strong long-term growth potential. Moreover, since it is just the beginning of electric vehicle sector in India, we are at the cusp of multifold growth in EV segment and that would further fuel the growth in both these stocks. But before we proceed, I would strongly suggest not to invest based on tips. Make sure that you do your own research before investing your money. By the way, now I am also spreading knowledge on Spotify with my podcast Personal Finance 101 with Sahil Bhadviya. So now you can listen to my podcast on Spotify anytime. In fact, you can also watch the video on Spotify. I have provided my podcast link in the description. Alright, now let's not waste any time and get started with the video. So the first stock is Minda. Earlier known as Minda Industries, company has now changed its name to Minda. Incorporated in 1958, Minda is a leading tier 1 auto component supplier for major OEMs in India and globally. Company caters to both two-wheeler and four-wheeler segment. And within four-wheeler, it caters to passenger vehicle, commercial vehicle and off-highway vehicles. Some of its top clients in India include Tata, Maruti, Mahindra, Hero, Bajaj, Royal Enfield, TVS, Ashok Leyland, Escorts, etc. So basically, company has all the top Indian OEMs as its client. Then some of its global clients include BMW, Ford, Honda, Toyota, Volkswagen, Yamaha, Nissan, KTM, etc. Again, it covers majority of leading global OEMs. If you look at the products of Minda, company caters to various segments like switches, lighting, casting, acoustic, seating and others. All these segments are critical component of a vehicle. For example, in a passenger vehicle, company manufactures alternate fuel system, air filtration system, alloy wheels, lighting, switches, seat belts, shifters, speakers, cameras, steering wheels with airbags, sensors, horns, etc. Minda is a leader in many product categories in India as well as globally. For example, in India, it is number 1 switch player. In acoustic system, company is number 1 in India and number 2 globally. In seating, company is number 1 in India. Company is market leader of alloy wheels for passenger vehicle. In lighting, it is number 3rd largest player. Company has also forayed into future auto components including multifunctional controllers, wireless chargers, EV technologies like battery management system, motor controller, smart plug, then digital lamps, sequential lighting, advanced driver assistants like parking system, collision avoidance, infotainment, telematics and IoT. Currently, company has an order book worth 1000 crore for EV segment and this order book is growing fast. If you look at the revenue mix in FY22, company generated 53% revenue from four-wheeler and 47% from two-wheeler. In terms of product segment, company generated 30% revenue from switches, 21% from lighting, 16% from casting, 8% from horns and 11% from seats. In terms of geography, company's 85% business is from India and 15% from international market. Minda is also expanding its operation in B2C segment with aftermarket product sale with 44,000 plus retailers. This segment currently contributes 9% in company's revenue. Remaining 91% comes from OEMs. Company has a very strong leadership team led by Mr. Nirmal Minda. If you look at the shareholding pattern, DII's shareholding in December 19 was 5.78%. This got increased to 6.64% and then 7.47, then 9.85, 10.23, 10.49, 10.93, 13.71. Then there was a slight dip to 13.14, but again shareholding increased to 13.21, 13.8 and latest holding at 13.95. So except for one quarter, DIIs have consistently added Minda in their portfolio in last 12 quarters. That itself speaks about the confidence of institutional investor in this company. And if you look at promoter holding, it was 70.79% but got slightly reduced to 67.41%. However, in September quarter, even promoters have increased stake to 70.11% and public shareholding is decreasing. So if promoters or FIIs or DIIs are consistently increasing stake in the company and public holding is consistently falling, then it is a positive sign, because generally public increases shareholding in wrong stocks and reduces shareholding in good stocks. If you look at the financials in last 5 years, company's revenue have grown consistently from 3,386 crore in FY17 to 4,471, 5,908, 6,222, 6,374, 8,313 and latest revenue at 9,266. Its profits have grown from 185 crore in FY17 to 331, 339 and then it saw a sharp dip due to COVID and profit fell down to 188 but then recovered to 248 crore, 413 and latest at 538 crore. If you look at company's profitability, its latest ROE is 12.1% and ROC is 13.8%. So profitability is slightly on the lower side, but expecting it to improve in the future. Company has debt to equity of 0.27, which is well under control. Currently, Minda commands a market cap of 31,000 crore. So it is a mid-cap company. In terms of valuation, company is currently trading at levels of 560. At current levels, it is trading at P ratio of 67.3, which is looking a bit expensive. But considering the leadership of Minda in its segment and bright future growth prospect, it will command a premium. Now, second auto ancillary company had its IPO last year and commands a market cap of 7,000 crore. So it is a small cap company. Company name is Craftsman Automation. Established in 1986, Craftsman Automation is a precision engineering company that manufactures various components and sub-assemblies for automotive, industrial and engineering segments. Its business can be divided into three key verticals. First is automotive powertrain. So Craftsman is a leading player for machining of critical engine and transmission components primarily for medium and heavy commercial vehicles, where it is at number 1 position. Then tractors, where it is among top 3-4 outsourced player and off-highway segment. Under this segment, company manufactures automotive powertrain parts like engine crankcases, cylinder heads, camshafts, transmission housing, differential carrier and axle housing. Then second vertical is automotive aluminium. Craftsman has recently forayed into this aluminium die casting space where it provides products such as crankcase and cylinder block for two-wheeler, engine and structural part for passenger vehicle and gearbox housing for MHCVs. Over the long term, this business is well placed to benefit from rising aluminium content due to lightweight of vehicles and increasing penetration of electric vehicle. Then third vertical is industrial and engineering. Within this, company has two sub-segments: storage solution and high-end sub-assembly and contract manufacturing. High-end sub-assembly and contract manufacturing product sub-segment include multiple categories such as aluminum products for power transmission, gears and gearboxes, material handling equipment, etc. Craftsman has recently launched a new sub-segment which is storage solution, and it has ramped up rapidly in last 2-3 years. Within this, company provides complete warehousing solution for conventional as well as automated storage and manufactures products like pallets, racking, shelving, vertical storage solution, automated storage solution, etc. for several sectors such as your FMCG, e-commerce, logistic, auto, pharma and electronics. Between FY18 to 22, storage solution segment has grown at CAGR of 138%. If you look at the revenue breakup in FY22, company generated a revenue of 2,206 crore, out of which automotive powertrain contributed 52% in total revenue, automotive aluminium contribution was 20% and industrial and engineering vertical contribution was 28%. So very well diversified business. In terms of geography, India contributed 92% in total revenue and 8% is from exports. Although Craftsman Automation is a very small cap company, it has an established track record of 36 years and has a very experienced leadership team led by Mr. Srinivasan Ravi. If you look at the shareholding pattern of the company, DIIs have added shareholding during IPO at 12.52% in March 21 and since then they have increased shareholding to 14.1, 14.35, 14.5, 14.82, 15.41% and latest at 16.34%. In fact, even FIs have increased stake in the company in last 2 quarters. Although promoters have slightly reduced their stake, but the way DIIs are consistently adding the small cap company, it clearly shows DIIs are highly optimistic on the future of Craftsman automation. If you look at the financials in last 5 years, company's revenue have grown consistently from 1093 crore in FY17 to 1471, 1810. Although there was a slight fall due to COVID, but again increased to 1546, 2206 and latest revenue is 2653 crore. Company profits have grown from 80 crore in FY17 to currently at 208 crore. If you look at company's profitability, its latest ROE is 15% and ROC is 17.8%. Company has debt to equity of 0.65, which is well under control. If you look at the share price, company launched its IPO last year in March 21 at 1490 and since then share has only gone north. Currently it is at levels of 3300, generating more than 2x return since its IPO. Even at current levels, company is trading at P ratio of 34, which is looking decent. Friends, now that the semiconductor chip shortage is reducing and the raw material cost has fallen with fall in metal prices and crude oil prices, auto companies will benefit from it. Although there is still demand side constraint in US and Europe, so companies focused on US and Europe might still face some slowdown, but auto auxiliary companies like Minda and Craftsman Automation with major business from domestic Indian market are poised to grow at a very good rate. And Minda is a mid-cap company with market cap of 31,000 crore and Craftsman is a small cap company with market cap of 7,000 crore. So both have very high growth potential. And institutional investors understand this. Hence, they are heavily investing in both these companies. Now tell me in the comment, which auto companies you are buying currently? And if you find this video useful, then do press the like button and subscribe to this channel for more informative content on money management and investment. I'll see you in the next video. Till then, take care.